All right, welcome everybody to the Retire Young podcast. My name is Josh Lilquist, and this is the podcast we talk about the financial markets, how they work, and different ways that you can enhance or upgrade your lifestyle. And I like to bring special guests on the show here, and today I do have one of those special guests, Steve Moses, first options trader on the Retire Young podcast. Steve, how you doing today?
I'm sheltering in place and waiting for 5 o'clock so we can open something. But other than that, we're pretty good.
You know, if you think about it, it's that old saying, it's 5 o'clock somewhere.
I know, but if I really honor the 5 o'clock somewhere, I'm going to have to start going to meetings, and that's just going to.
Yeah, we don't want that to happen. Thanks for coming on the show here today. I mean, I like to talk to a lot of investors and traders that have been doing it a long time, and you specialize in the options market, but I just kind of want to backtrack a little bit. How did you really get started in the financial industry, the financial markets?
You know, what's the expression? The best laid plans, or when you're ready to learn, the teacher shows up. It was, I don't want to say an accident, but it was not my doing. Back in 2004. So my background, I mean, I like to joke when I'm teaching, I have the perfect background for trading the financial markets.
Okay.
I was an actor. In a past life, which means I was really a waiter. You know how that goes.
Yeah, there you go.
But in my 20s, I got a job in publishing, magazine publishing. So if anybody listening remembers PC Magazine, Computer Shopper, back in the day, certainly pre-internet when publishing was still.
Yeah.
And I thought that would be my gig for the rest of my life. Those magazines were doing hundreds and hundreds of millions of dollars in revenue, and it was great. But in 2004, I mean, the internet had started to hurt publishing. I left the computer magazines, and I was working for United Airlines, their in-flight magazine, Hemispheres. And in May of '04, I was married at the time, and my wife had gone to a seminar for asset protection because we had started doing some condos for real estate, passive income,
Sure.
Another financial leg on the table.
Yeah.
And before she learned about the asset protection, this company had come out and done a preview they sold education, teaching people how to trade the markets. And she thought, wow, it resonated with her. I mean, this was 2004. The dot-com crash was '01 to '03.
Yep.
We lost a third of the IRA. And so the thought of being able to trade the markets, kind of like not so much trade with the big guys, but kind of know when to get in, know when to get out. And she thought this was a cool thing. So she calls me up on the cell phone one day, and she goes, "Hey, honey, are you sitting down?" All right. If you're married, that's never a good way to start a conversation.
Yeah. Run.
Yeah, right. So I said, "Yeah, why?" She goes, "Well, I went to the seminar, and I signed us up. I spent X thousand dollars. I signed us up for a class. They're going to teach us how to trade the stock market. You're going on Friday."
Oh, nice.
I cannot repeat my first response. Excuse me, going where?
Yeah.
And long story short, I didn't want to sleep on the couch for 3 days, so I said I'd go. It was the Friday before Memorial Day weekend of '04.
Okay.
And we drove down to Cherry Hill, southern New Jersey, about 90 minutes from the house. It was a one-day seminar in a hotel, and they used red and green arrows, and they got you in. You could have gotten in here and got out here and not lost money on the way down. And it was my first exposure to not to anything other than buy and hold.
Yeah.
Anything other than mutual funds, anything other than just you're in it for the long haul. All the cliches you and I always joke about, and I just thought it was a scam. They were just going to try and sell me something, and I mean they were. I mean it's education. I mean everybody's quote unquote selling something.
Sure.
But I was anyway. Long story short, we ended up. I didn't want to go. But they pulled up a chart of the mutual fund that I had been in. And sure enough, the guy said you could have gotten out up here in '01, got back in down here or somewhere in '04. Not out at the top and in at the exact bottom, but, ranges, areas.
Yeah.
We ended up spending money that day, and we enrolled in our education. And this company only taught stocks and had courses for stocks and options. Didn't have futures, didn't have Forex. It was just stock and options, and stocks are expensive.
Yeah.
And stocks, I didn't really know about leverage. And but the options sounded amazing to me when they were explaining.
Yeah, you did kind of open up a can of worms there with the mutual funds. I mean, everybody knows that mutual funds and stocks, and you just mentioned options. That's kind of your specialty, right?
Right.
Why did you gravitate towards that? It's probably something you never heard of, right? I mean, was that some brand new as well?
Right. Oh, I mean, to me, an option was, one from column A or one from column B at the Chinese restaurant. I mean, um, options are leverage, and just think of leverage. And most people couldn't be involved in real estate without leverage. I
Yeah.
mean, yes, some people could put cash down for a house, but not many. So we use a small amount of money to control a larger asset. And an option is on a stock is pretty much the same thing. You could buy 100 shares of, I don't know, Apple today. It's $280 stock, so give or take.
Mhm.
So that would cost you $28,000 to buy 100 shares.
Yeah.
Well, you could use leverage. You could buy a call option, giving you the right to buy 100 shares of Apple at some defined date in the future for maybe 90% less than the cost of buying the stock. So in a sense, if you bought a house for 100 grand, paid cash for it, sold it for $1.2 million, you made $200,000 profit on your 100 grand, it was a 20% rate of return.
Yeah.
But what if you use leverage? And what if you only put 100 down on the house, mortgage the rest, sold it for $1.2 million? Now you made 200,000 on a $100,000 investment, and that's a 100% rate of return.
Yeah.
So it's using, options are leverage just the way we would use a car loan or a house loan. Now, it's not borrowed money. I don't mean leverage in that sense. When you
Sure.
take out a mortgage and you're borrowing money. But so options just, jumped out at me at that day. A, for the leverage. And here's
Yeah.
the real reason. There are put options. I never knew selling short or the ability to make money to the downside. So, I joked about mutual funds and buy and hold and all the cliches.
Yeah.
Well, I just thought it's America. When the market goes down, you lose money.
Yeah. Down is bad, right?
Yeah, yeah, down is bad, and I realized that not only is down not bad, but down can be better than up.
Yeah.
and
Well, it goes down much faster than it goes up.
Right,
The saying is, it's you take the stairway up and the elevator down.
right, because people panic and sell, they don't panic and buy. So
Yeah.
absolutely, and
Yep.
so I was exposed to leverage. Then I was exposed to, and look, you can short stock, and a lot of people have heard about selling short, don't maybe know how to do it, or concept is a little nebulous there, but they know you can make money to the downside. But
Hmm.
selling stock short has unlimited risk, because if you buy a stock, what's the most you can lose? What you paid to buy the stock, and a stock can only go to zero. But
Exactly.
if you sell something short, your risk is to the upside. And there
Yep.
is no, one of my phrases is there's no zero to the upside. So
Yeah.
if you short stock and you're wrong, how high can something go?
Yeah.
Unlimited.
Well,
But
how do
we
you
but
protect yourself?
well, first of all, there are put options which give you, just like a call option, which I just explained, give you the right to buy a stock no matter how high it goes. A put option gives you the right to sell a stock at that price no matter how low it goes.
Okay.
Well, if you buy a put option, now you don't have unlimited risk. The most you can lose is what you paid to buy the put option. So it gives you the ability to profit to the downside using leverage without unlimited risk. And
Got it.
that's amazing, because most people, even if you want to sell short, you can't sell short in an IRA, but you can buy put options. You can trade put options in retirement accounts.
There you go. But it's always you kind of alluded to risk management. So because so many people just buy and hold that buy and hold
Right.
strategy, or hope, whatever you want to call it, with no plan of
Right.
gain or loss. Yeah, with no plan at all, and they hope it goes up. Well, if you can minimize your risk through options, protect yourself. I mean, you can kind of use options like a insurance policy, right?
You
Especially
know,
retirement accounts.
thanks for the softball there. I will ask students in class all the time. I will say, well, let me see a show of hands. Who's got homeowners insurance? Hands go up. Who's got life insurance? Hands go up. Who's got car insurance? Hands go up. Who's got health insurance? Hands go up. I go, who's got IRA insurance? And they start to raise their hand. They go, what? IRA insurance?
Yeah.
The heck is that? And I'm saying, I mean, who has IRA insurance? And no hands go up. And I say, guys, I'm not kidding. I mean, I'll joke about anything, but I don't joke about money. I
Yeah.
say, who's got IRA insurance? And finally, someone will say, well, but there's no such thing, or I didn't know about it. And I go, bingo, that's the problem. I mean, think about the concept of insurance. If God forbid your house burns to the ground, what do you get? Well, a check.
Yeah.
Assuming your house is paid in full, assuming the policy is paid in full,
Yep.
assuming your policy
Paying your
didn't get
premiums.
fire. I'm from New Jersey, assuming you didn't start the fire, but that's another.
Typical
Um,
New Jersey
but
guy, right?
typically, yeah. But you did lose the asset, but financially you're made whole. Well, think about it. If you owned a stock that was trading at, I don't know, $500 a share, and the stock went down to $300 a share, well, how would you like to sell a $300 stock for $500.
Mm-hmm.
Well, that's an insurance policy. How do you sell your house if it's $1 million house? How do you sell your $1 million house for $1 million if it burned to the ground? You have an insurance policy. And
Exactly.
put options can actually be insurance policies for stocks, for ETFs, and you can insure mutual funds, not directly because mutual funds aren't optionable, but you could buy puts on the SPY, which would increase in value as the market goes down, deflating or lowering the value of your mutual funds. So
Right.
there's so much to explain to people about how to profit to the upside, protect yourself to the downside. It's really it's a shame that people don't know about it because the only thing we're sold is mutual funds, safe,
Yep.
diversified, way to
Remember,
go.
people are sold those. They're not really, I mean, you wouldn't really call them they're
Yeah,
investing for you. They're selling you products is what that
right.
is.
Absolutely.
Yeah. It's all about being more proactive than reactive. And
Yep.
once you have a plan to be proactive, especially in the options market, then you have more comfort and confidence in in your finances, because then you know that you're not going to lose everything that you have if you do it properly.
Right. And it's, and I guess the biggest aha moment for me was that you can do it.
Yeah.
Trading, if you think about it, and a lot of people shy away from the word trading because that sounds like the 90s day trading, sitting
Yep.
there clicking a mouse and blowing up your account. But even if you take the word trading, just call it self-directed investing. And most people don't realize that they can do it on their own. And dare I say, even if you just do it yourself and don't pay fees and sit in ETFs instead of mutual funds, you will outperform the market. Even if you did even if you bought ETFs and bought and held, and you just didn't pay the fee, you'd still lose money if they went down. You'd still make money if they went up. But even if all you saved was 1, 2, 3% fee, you're outperforming the financial advisors with all those diplomas on the wall
Yeah.
and all the stuff that they have.
Yep. Yeah. It's really amazing. I mean, look.
Way, yeah, to be able to know that you can do it. But think about it. It's a skill.
Yep.
If you want to be an engineer, you go to engineering school. You want to be a doctor, you go to doctor school. You want to be a lawyer, well, maybe these days you go to prison, but you go to law school. You want to be a trader, go to trader school and
Yeah.
that you can learn how to trade. Buffett didn't just wake up one day, when he was born, the doctor smacked him on the butt and all of a sudden he knew how to trade.
Yeah.
You had to learn how to do it just like any hedge fund guy, any market maker. You and I know a lot of guys who worked on the floor of the exchange, and
Yep.
they had to learn how to do it, and
Yeah.
it's a skill.
Yeah, and it's not rocket science. People just haven't been taught, and that's the problem.
Right.
With we've had a lot of volatility in these markets. We had a pretty big drop. I believe it was right around 30% initially.
Yep.
It's retraced a little bit. What is
Yep.
your what do you think is going on in these financial markets, and where are you seeing any opportunities with what's happening?
That's a great question, and I always like to joke. I'll answer that two ways. If I really knew what the market was going to do, would I be here talking to you?
There you go.
Nothing personal, dude.
Well,
I'd be
maybe just
backing
because
up.
you like me, right?
That's right. It's the hat. It's the hat.
I
I'd
know.
be backing up the truck if I knew what the market was going to do. I think that one of the ways to manage money successfully is to take the emotion out of it. And let's face it, institutions move markets. So if you can get in when they're getting in, get out when they're getting out, however you figure that out, and we don't have enough time to talk about that today, but if you could
Yeah.
get in when Goldman, Morgan, Merrill's getting in and get out when they're getting out, you'd have better rates of return and better profits. So I think and the reason I say that is the charts talk to me. You
Okay.
can see, I like to call it footprints in the sand. If my dog ran away on the beach and I called him and he didn't come back, I could follow the footprints and see exactly where he went.
Yep.
Well, think about the stock market. If you want to know where the big guys are trading, look for their footprints. Now, I'm not talking insider trading. They're not going to tell me what they're doing. But if the average retail guy buys 100 shares, 200 shares, 500 shares, no, nobody cares about that. But if you're Goldman, Morgan, Merrill, and you're buying hundreds of thousands or millions of shares,
Yep.
100 shares doesn't leave a footprint.
No.
Millions of shares leaves a footprint. So I let the charts kind of tell me where I think the institutions are doing what they're doing. The reason I said that is I don't know why we've retraced as much as we've retraced. This country, and again, I don't want to get political here, but this country now has 20-something trillion dollars of debt.
Yeah.
It's not going to get better before it gets worse. I think earnings are coming out now. The next earnings at least the earnings coming out now had some of January and February before stuff hit the fan.
Yep.
But the next earnings in July is going to totally reflect the shelter in place and everything that's going on. And I'm just kind of surprised that we've retraced and rallied as much as we had.
Yep.
I mean, the last 3 Fridays, these mind-boggling unemployment numbers come out and the market's going up.
Yeah, another 4 million.
It boggles my mind. Now, to your question, if you're trading stock or mutual funds, you're a directional trader and you got to get the direction right. And that's kind of hard because, we'll have a 500-point up day followed by a 600-point down day. I mean, you almost need a chiropractor in this market.
Yeah.
Another nice thing about options, we talked about leverage, we talked about insurance. Another nice thing about options is what makes options so unique. It's the one asset class that even if it's worth zero intrinsically, you can sell time. So you can sell what's called out of the money options. And there are option strategies designed to profit where you think a stock is not going to go. See, every other investment we've all ever made, it has to go up. You buy a house, has to go up.
Mm-hmm.
You short a stock, has to go down. Any investment you've ever made in your life, you had to be right on the direction that the value of the investment was going to go. With options, it's the one asset class you can be wrong directionally and still make a profit. Now, when I say wrong, I mean you can be a little bit wrong. I don't mean Enron wrong.
There you go. Yeah.
Zero. You can't go out of business wrong, but
Yeah.
you can be wrong directionally and make a profit because you're selling time. Yeah. You're selling what we call extrinsic value. And it's not as complicated as it sounds,
sure.
But there's stuff to learn. And I'll be honest, I think, options are not the easiest asset class to learn. But when you learn them, I think they're the easiest to trade.
Yeah.
Think about it. If you can be wrong directionally and still make a profit, there's got to be, it's got to be easier to make a profit. And just
isn't that a weatherman?
Pardon?
Isn't that a weatherman?
A weatherman and a politician. And I just want to, full disclosure. I mean, there are no guarantees here. Every trade has risk. There's no such thing as a guaranteed, no risk options trade, just like anything else. Like I said, if there was, I'd be backing up the truck. I'd be living in Scotland now or something.
Yeah.
But you don't have to be 100% right on the direction, which makes it pretty cool.
Correct. Yeah, it's just managing that capital the right way, and I'm glad you mentioned the banks, institutions, the big money. They're the ones that move the market. So, like you were talking about, it doesn't matter what's really happening in the world. You just do what the price action is telling you. Is kind of what I'm sharing. So it doesn't matter. So that way, when you have that, you just follow the rules within your plan and just trade based off your plan.
Well, think about it and think about why that makes sense. Most people think when they hear good news, well, I mean, stock's going up, I'm buying. Bad news, I'm selling. But how many times have you and I heard news that from our vantage point, we think is great and the stock goes down, or bad and the stock goes up?
Yep.
Because for a lot of reasons, just because you and I think something's bad, if Wall Street thinks it's good.
Yep.
I mean, I remember when I was a new trader back in 04, 05, Goldman Sachs came out with an earnings announcement one day, and I see the headline on the New York Times. I'm reading it online. Goldman Sachs had announced their earnings the day before, and the headline comes out right after the market opened. It said, Goldman Sachs earnings up 92%, stock down 5% at the open. There was a new trader going, I mean, if my earnings are up 92%, I'm doing pretty good.
Yep.
When I read the article, Wall Street's expectations was that their earnings would go up 105%. So even though the earnings went up 92%, they actually disappointed the street, and the stock was down 5%.
Yeah.
Well, so it's not what we think, it's what they're doing.
Yeah, and it just creates opinions too, and opinions don't move price, right. Facts do, and that's the actual price action on a chart. And I'm really glad you kind of brought that up, and I really appreciate your insight on the options market, because there's a lot of people have never heard of that before. So I mean, I appreciate that, and also your insight on the market, what's happening. I mean, doesn't matter. You just want to trade and invest off the charts. So I appreciate you coming on the Retire Young podcast. Hopefully we can get you back on again. I know you're super busy in wine country over there.
It's a hardship. Yeah.
Yeah, I know. But thanks for taking time out of your day here today. And we'll look forward to having you on again. Thanks a lot, Steve.
Anytime, Josh. Tell everybody in Minneapolis I said hi.
I will do. Talk to you soon.
Bye-bye.